We're live, we're good. Okay. Welcome everybody. Lindsay Davis, I'm sorry, I'm hitting the table. Sorry, Jesse. Lindsay Davis, CEO of Spartan Invest, and I am very excited to welcome Heather Melson again. So she's been on a few episodes of Sips with Spartan with us, and she was actually our CPA speaker at our 2022 Spartan Summit. So welcome, Heather.
Thank you.
All right, tell us a little bit about yourself for those joining that may have missed the summit or may have missed your presentation. I mean, they missed a time. In fact, really quick, I'm going to just do a really quick cut because during her presentation, she started it with "I love memes." So our marketing director, Jesse King, put together a meme for her. Are you going to share that with us?
2 seconds.
2 seconds, and it is Jesse King's birthday too, by the way. So shout out, Jesse, happy birthday!
Birthday! Check that out.
Look at that. That's pretty solid. No, she's just a wealth of knowledge when it comes to real estate taxes and the tax implications of the investment. So we're really excited. So just tell us a little bit about yourself.
Okay, well, I'm a Tuscaloosa native. I've been up here in Birmingham for 15 years now, doing public accounting the whole time. Kind of shifted over from medical practice into looking to a lot of other stuff like real estate investing. How can my clients earn money, build wealth, save taxes, what opportunities are out there, how can we diversify everything? So got in touch with Lindsay and just really saw a lot of opportunity there for some of my clients and her clients to save taxes and really just create more revenue streams there. So we did the Spartan Summit, what was that, 2 weeks, 3 weeks ago?
About 2 or 3 weeks ago. Right. Yeah, so give us just a really quick, so in case you guys missed this summit, we did hold it in person and virtually. So the virtual tickets are still available. They'll be available for another 6 months if you are interested in all of the speaking or all of the speakers' content. But give us just kind of 3,000 feet.
Yeah.
She went into a lot of detail, and it was a really, really great session. There was a lot of great feedback on all the data that you presented to all of our real estate investors. So really quick, just kind of give us big picture what you covered.
Yeah, so when I was first asked to present, I thought that we were going to be presenting on all of our tax changes, everything new that was going to be passed, and I kept waiting and waiting and waiting, and as we all know, nothing ever passed. So when we did the summit, we went ahead and kind of looked at the Build Back Better bill that was still mostly dead, I think from most people's point of view, but they were still trying to vote on it. And we kind of looked at what all was in it, how much money was there, what the deficit was going to increase by if this passed, and what we were spending money on. And kind of the big focus there was look and see like who you're voting for and what they're going to be spending money on and how they're going to affect you down the road. Because these are all issues that even though they didn't pass and Build Back Better, they're still on the table, and we've still got people trying to get all of this through in the current legislation. We shifted over then into real estate. We looked at what's deductible and what's not for your rental property. We took a couple of Spartan sample houses. We looked at a renovated property and a new construction, looked at what your cash profit would be at the end of the day, what your tax profit would be, and then what the tax would be on that. And we were able to compare it and see what it would be if, let's say, you financed your property or you paid cash, if it was new, wasn't renovated. And then we kind of looked at if this same dollar had come from ordinary income, like at your job or on your W-2, or had it come from capital gains, such as an investment account, what's the difference in the tax rate there? And so it was really neat. We got to kind of look and see how we can use depreciation to our advantage and get a lower tax rate on the money we're generating through this passive income and real estate investments. So then we kind of finished up looking at 1031 exchanges and just the opportunities that are out there. I know a lot of people right now are trading in commercial, they're going into residential, or they're just changing just where they are. So there's a lot of opportunity to take advantage of the market and not pay tax on that.
Right, and we can get into the weeds a lot with everything that she was saying as far as the renovation versus new construction. There's a ton of information online on our website about that, about the different tax strategies and in regards to real estate versus the new construction renovation. Now, I'm sorry, no offense, Heather. I know that you're very passionate about taxes and tax law, and obviously she's very animated about it. But man, it can be kind of boring. I'm sorry. It's no. It's such good information, but
it's not boring when you are saving taxes, and it's exciting.
It is very
exciting. Your money in your pocket. It's exciting.
It is very
When your
exciting.
investment property is appreciated by $100,000 in the last 5 to 6 years, it's exciting.
You need to know about it. But yeah, but it's just a lot of like, you can get in the weeds with that data and stuff, and it's so important. And Heather is really, really good at breaking that down for you to kind of where, you know, maybe if you're not in love with tax law, you still understand it, right? Like, and I think that's the biggest difference. That's the biggest benefit that Heather provides to her clients. But from your presentation, what was the biggest question or the biggest, you know, kind of feedback that you got? Because I know right after you presented, there were a ton of people kind of lined up to talk to you. So what were their questions?
Yeah, so I thought I rushed through a lot of it. I really didn't want anybody to miss the bus with property tours. But yeah, that's why they're coming. They're trying to hurry up, and I'm like, oh, can we talk a little bit longer? I'm sorry, you get on the bus really quick. Lots of questions about 1031s. Everyone's interested in that, and everyone's concerned, how long are we going to have the 1031 option? I mean, every year we hear what different politicians want to do to generate revenues, but I know specifically this past spring, we heard President Biden discuss changing 1031, disallowing, limiting it, a couple of different options. None of those actually passed. So as of today, and as of what we know right now, nothing has changed about 1031. But we have to keep it in the back of our mind that that's something they are exploring potentially getting rid of. And they've explored limiting it to only being available for properties that sell for $500,000 or less, and looking at your income and deciding who's considered a high income earner and not allowing them to participate. So there's a couple of different options out there right now that we could see in the future happen. But as of right now, it's still there. That was a big concern a lot of people had was, oh, well, how long do I have to do a 1031? And unfortunately, my answer is, I don't know. But right now, it's still out there. So if you're thinking about it, let's explore it more. Let's see if this is the year, or are we planning on doing it maybe next year? And start laying those plans out in terms of what you're selling and what you want to buy.
Right, and then we have a ton of investors that are utilizing, you know, and I've heard that are in the process of doing the 1031 exchange. And most of the time, what we see from our investor clients is people that have purchased property in Southern California, Hawaii. You've got one townhome, and you can buy 5 to 10 probably properties in Alabama once you sell that one. But so that's a very hot topic, right? Because the market is so big, they're probably able to get a little bit more out of their properties. But inventory is a big issue right now. So if you've got a property that you want to sell, then having another property to acquire right after, what would an investor be able to do to still be able to capitalize on a 1031 exchange?
No, I mean, that's a very real concern. When we hear people all the time, they're looking to buy, but they're not putting their house on the market because they know it's going to sell. The biggest thing is you can do a reverse 1031. I think a lot of times we forget it's out there just because we haven't had to use it a lot in the past. But with reverse 1031, we're going to work with our intermediary up front, and we're going to we're going to buy what we want our replacement property to be, and the intermediary is going to hold it until we sell our property. So we've still got a 45-day period to identify the property we're going to sell. We've got 180 days to close. So we still have to get this transaction completed. But what this does is it protects us from being out there having sold our property and then just racing to find something as quick as possible because a large tax bill is on the table. We don't close and we're forced to buy something we really didn't want to buy or pay taxes.
That's huge. That is a very, and I agree, because I don't think a lot of people ever talk about a reverse 1031, and that is a very big concern. So please, investors, I mean, is there any kind of advice that you could give in talking about a reverse 1031? Because we've seen a lot of investors come to us like, hey, I need to identify right now. And if it comes at a time where we don't have any inventory, I mean, we can't help them. We're in the same boat, trying to get as much inventory as possible, try to build new construction homes. So what would be some tips for an investor on doing a reverse 1031? Like, what would be kind of maybe the first couple of things they should do?
I mean, I think the first thing is really going to be looking for whatever property you're going to acquire. And it might be that you're getting in touch with the sales staff at Spartan so they know that, hey, I'm wanting to do a 1031. I'd love to go ahead and kind of just get it going, just in case there's an issue with legislation down the road. And being in touch with your intermediary, having them know, hey, I'm looking, and having them ready for when you do find what you're looking for. So you can close quickly and they can step in and do their part of the transaction.
Then oh man, I lost the 1031. So you said there was a lot of it from commercial to residential. And you know, I got to talking to a few investors at the summit about just different scenarios.
Yeah.
As far as what you can use. Lindsay, she loves it, man. Absolutely loves it.
I heard some fun scenarios
I know.
too. And I was like,
Really
whoa.
interesting. We heard, you know, talking about trailer parks, campgrounds. And so like how do you do a 1031 exchange? So are there any limitations to? Is it strictly, hey, real estate doesn't matter the category or zoned or whatever?
Yeah, so we're like kind, and currently right now, every real estate is like kind. So farmland is like kind to any other land. Investment land is like kind to residential. Residential is like kind to commercial. It's very strange, but right now the service is saying all real estate is like kind as long as it's not personally used property. I think kind of the bigger layer of complication we saw in a lot of those interesting questions was who owns this property. So I heard a lot of it where an LLC or a partnership among friends, siblings, family, they're holding the land. And so then they're getting ready to sell the land or the real estate. And part of the owners want to do a 1031, part of them want to cash out. That was kind of the complication a lot of people were seeing. And of course, there's a couple of different options of how you can do that. Typically, the smoothest transaction is to either buy out the non-participating 1031 members first, but that comes in, we've got to have the cash to be able to do that, or to participate in the 1031, have the partnership, sell the property, get the replacement, close all that out, and then buy out the exiting members. But again, it comes back to a cash situation. So I think the biggest line there is we've got to have the cash for the full property. We can't just take 25% of the property and 1031 our 25% if we don't have the cash to buy out the other 75%.
Gotcha. Yeah, those were really good questions that I had never heard before, and so I didn't know that either. So that's really good. The issue that we've got, so I'm going to kind of take a turn right now. We've talked about the topics that you talked at the summit and kind of what's next and 1031's possible change in the 1031 exchange regulations, but what's going on right now, and I know it's a topic that everybody wants to talk or is talking about, is the issue with Ukraine and Russia advancing. And what kind of conflicts do you see? I know it's really hard to kind of look at a crystal ball and see what that might look like in the future, but what do you think might come out that would affect our investors?
Yeah, so I mean, a lot of stuff that I've been reading and kind of looking at just the short time period that's been available, it's been looking more with banks that are holding debt for Russia or for the Ukraine right now. I guess you could say the U.S. is in a good position there, that we have a very small amount of Russian debt that we would be concerned about. This is really going to affect European banks more, but at the same time, that's going to affect how the euro stands against the dollar, and I'm sure inflation is going to come into all of that as well. Those are going to be questions for people a lot smarter than me, but I know those are going to be some issues right there. We're going to see volatility in the stock market because we're seeing a lot of national or worldwide companies pull out of Russia. Starbucks, McDonald's, they're all closing down those locations right now. So we've got that issue at hand. Then we've also got the oil prices, the gas going up significantly right now. No one can say they haven't noticed that. Right. That's huge. But I keep looking back and thinking, I'm okay with paying a little extra for gas right now if I'm not in Ukraine. Like if I'm not going through what they are going through, like I can pay $5 at the gas station. Like that's just how it's going to be right now. But I think it was look at the bigger picture. We've got more legislation going through maybe this week. They're looking at doing an extension to Tuesday, but right now they're supposed to pass something by Friday or potential shutdown is my understanding. But the House came out with a 3,000-page bill last night. They're supposed to vote on it later on today, but that's a lot for anyone to have to read and cover.
So you didn't read all of it?
In like 12 hours, that's a lot of information. I would think some of the stuff from Build Back Better is probably in there. What I've heard is that a lot of the COVID stuff was pulled out so they could get Ukraine aid through quicker. So some of that's gone. There's still some of the social matters. I know we had a lot of FMLA pay and those different things that we had talked about at the summit. Some of those items are still in there. I'm not sure which ones, but I haven't read the 3,000 pages either. But after it goes to the House, it's got to go to the Senate. Hopefully, we're going to get the extension until Tuesday, so we'll have more time to look through it and we won't have to shut down. I think the other big thing we're going to see is crypto currencies can be more regulated. So we've heard back and forth that we want to regulate it. We want to make sure everybody's paying tax on their earnings from it. We want to know who has it and what they're doing with it. And I think this is a huge platform we're going to see our administration use to really regulate hard and say that they're trying to ensure that sanctions aren't broken. But in reality, I think we're probably just trying to regulate crypto. But we're supposed to have a plan coming out from the White House in the next week of what those guidelines they're going to try to enforce will be.
With crypto though, like, isn't that the benefit, or I guess the seen benefit of cryptocurrencies, that it can't be regulated and then at all?
That is, I mean, they're trying right now. We've got a little box in our tax return this year where you're supposed to mark whether or not you bought or sold any cryptocurrency. So, I mean, they're polling us. They're trying to see what's going on. Coinbase is going to be required to report going forward now what's being bought and sold. So, I mean, they're working on it. They're going to get there. I think the days of selling Bitcoin and making money and not paying tax on it, those are over. But to what level they're going to regulate it and how it affects value, that I can't answer.
Yeah, we had a lot of cryptocurrency questions in regards to, you know, hey, purchase of real estate and everything like that for us. And yeah, the gas, I agree, it's gonna stink to pay a good bit more, especially for, you know, when we're driving from like property to property, it's pretty bad, but not near as bad as those. I agree with you there. So kind of jumping back to, we're talking about a bunch of different tax laws and stuff. So I wanted to ask you one other question. We got a lot of this from the summit, circling back to that, and the pros and cons when selling for properties. So we've had a lot of investors right now, especially with the market so hot, that they're like, hey, you know what? I bought it 4 years ago, 5 years ago. It's appreciated. I've got $5,000 or 500 or 50. Gosh, I can't talk. $50,000 worth of equity in the property. I want to take that. I want to, you know, capitalize on that. So what are the pros and cons as far as from depreciation and all of the tax benefits and selling on that?
Oh, I mean, they're all over the board. Let's be honest. There's not like a one size fits all answer for that. I think the first question I always ask somebody when they say they're considering selling a property because the value has gone up, I say, okay, what are you gonna do with the money? Like, that's the first question I always wanna ask is, you have this property, it's got a great revenue stream on it. Yes, it's appreciated, it's awesome, okay, great. So we sell it. What are we gonna do with the money when we sell it? And what are we gonna do that's gonna have the same rate of return as your property did? So that's kind of your first question you really gotta look at. If you have another property you wanna buy, again, 1031 time. But then we've got to look and see, okay, we do sell it, we take the cash out, we're not reinvesting it into real estate. We've got to look at what's our tax going to be. We do get hit with the recapture. So anything we've taken depreciation on, we have to report that gain at 25%. The rest is going to be capital gain. And everybody gets kind of upset about the 25%, but it's still a lower rate than you were in when you got your deduction from those people. Because if you were in a 30-35% tax rate when you were earning income on that real property, you got that depreciation deduction at 35%. So you're only paying tax on 25% now for the gain. So, and it's only up to the point you had depreciation. So you still came out better in the end. It's just, you're like, oh, I thought it was all going to be 15%. And now it's not going to be 15%. It might be 25%. So that's kind of one thing to look at there. But really the biggest thing is, what are you going to do with the money? Like, how are you going to replace that income stream?
Right. I mean, and that's really important to look at. It's like, what is your overall, like, kind of long-term goal? And in your investment future strategy. Okay, so our investors right now, so we want to kind of keep tax law, we want to keep it short and sweet, right? We don't want to get too much in the weeds, but 2 investors out there right now, top 2 advice, what you got? Top 2 pieces of advice, I probably should have said, but yeah, from tax strategists.
Tax strategies. Communicate with your CPA. That is, I think, is the thing. Because
that's huge. It is.
Well, they're a wealth of knowledge, and they know up front on the front end what you're doing and what you want to do. They can help you set it up to, like, for the most tax advantage situation that you can find. So that's always the big thing. And then the other thing is, don't be rash. Like, just think it out, make sure it's what you want to do before you actually do it. Like so many people, I think the biggest thing I saw was, oh my gosh, this is awful. But when you can take the money out of your retirement, right? We had the first hit without the penalty.
Oh.
Lots of people had a lot of clients who took money out to do different things, but we didn't stop and like look at what was the long-term consequence of that. And the things they were paying down debt, where in these cases, it was fixed rate debt that was a low rate, and the earnings would have been much higher on retirement. So it's just that let's stop, let's think it all through, and let's draw it out in each scenario and look at the tax effects and the long-term income earning before we make those decisions.
That's a really good point. I completely forgot about that option.
Yes, yes.
And gosh, I can't imagine pulling that out again and then kind of looking back now and you're like, oh, wait a minute.
Yeah, so we had some people that did it and paid off properties and they had a great rental stream and it worked out perfect for them. But then we had some people who did it who weren't quite at retirement yet and are still going to be working for many more years, and just looking at what they sold at and what it would be at even just today, a year or 2 years later, like they lost so much earnings potential and they didn't really gain that much.
Right.
And so that was kind of what we really needed to look and see, was that the best use of the money at the time? But I know, again, we were all panicked and we were just acting like just super fast without thinking.
Well, I mean, and I can understand that too. So it's been 2 years, but still 2 years ago, we don't know what we know now. So when you said kind of talk to your CPA, that made me think of another question though, as far as what would be the biggest questions that investor clients should ask their CPAs when they're looking for one, looking for one to help set them up in the best possible way, I guess, for especially in regards to real estate investment.
Yeah. So yeah, no, that's a great question. I think one of the things is really just asking them, do they work with real estate a lot? And if they do, just asking them, you could ask them questions about how do you break out the cost of your properties when you depreciate them? So a lot of times that right there is going to tell you if they're real familiar with what they're doing or not. If you start asking them what you can write off, if they give you solid answers, you're going to know right then they know what they're doing.
I think that's good too. When you're
interviewing them too, like it's not like you're not, oh, please take me. Like you're interviewing them to make sure that their goals are in line with what your goals are. And I know, like, just through the summit, like you've got a good black and white answer of what is and isn't allowable, and you can always use that to compare to what your accountant is telling you. And that's going to kind of help you see like what level of aggression are they at, and is that where you want to be?
Right. Well, I'm interested, and hopefully we can have you back on to talk a little bit more about the cryptocurrency regulation, because I think that's going to be a pretty hot topic.
Yeah.
I think you're right in regards to that. And do you have anything else to add before we sign off?
No, thanks for having me back again.
Thank you guys so much. I really appreciate it. Mark on or comment on here if there's any other topics or anything else that you would like us to talk about. This Sips with Spartan kind of came to life through COVID as well, as a way to connect with our investor clients and answer any questions that they might have about any particular topic or how things were affecting Birmingham. And so yes, thank you so much for joining us, and thank you, Heather. I appreciate it.
Thank you.
She's a wealth of knowledge. So if you have any questions, feel free to reach out, and her contact information's on all of our social media pages as well too. So thank you guys so much. Have a great one.